Affordable housing has become the defining challenge of this generation, not only in America, but across the world.
Home prices.
House prices.
House prices have grown so much faster than wages that young people will struggle for years just to save for a down payment. Also, they can struggle for decades to make the repayments on their mortgage. At the same time, we are told that our home is our biggest asset. And the last time the real estate market saw a significant dip, it took the global economy down with it. So, can we make houses affordable without destroying the economy?
I know the cost of housing is so important to you.
We want home ownership to be a reality.
We introduced a new incentive program to help first-time homebuyers get into the market.
According to data from the US Census Bureau, the home ownership rate in America is 65%. So the majority of people have a direct financial interest in not seeing their biggest financial asset lose its value. This is in spite of the fact that according to a study by the Cato Institute, 87% of Americans are worried about the cost of housing, which means there is a big overlap between people who want affordable housing, as long as it's not theirs. This means that the only winning course of action for politicians is to performatively make the problem worse. The Biden administration has announced plans to offer tax credits of up to $10,000 to families selling their home to another owner-occupant, in addition to another tax credit of up to $5,000 to offset mortgage rates for first-time homebuyers. These could be used in conjunction with a $25,000 bonus for first-generation homebuyers. But if you are a new buyer and get $40,000 worth of extra tax bonuses and grants, all that will do is make affordable housing $40,000 more expensive, which doesn't really make you any better off overall. It is great for existing property owners though. This has been tried in other countries like Australia and Canada, and it did not work as a long-term solution. Although it did allow for Richard to Airbnb his basement and use the proceeds to buy a McLaren. In fact, their real estate market is even more fucked than ours. Presumably, the only reason Patrick Boyle has filmed all of his videos in random offices and classrooms is because he couldn't afford the rent on his flat in London on his modest income as a hedge fund manager. Most policies that aim to give more purchasing power to new buyers really only benefit existing owners, even if it does let politicians score some easy points in the short term. So, if you can't make houses more affordable by increasing people's buying power, then the only option left is to make houses more affordable by lowering their prices. This sounds simple, but it can cause some big problems. If house prices collapse too quickly, it can leave people underwater on their home loans, where the money they owe to the bank is worth more than the house itself. This can destabilize the financial system and the economy that depends on it, because it makes lending highly risky if debt can't be secured against real assets and some people choose to just walk away from their homes. This can have knock-on effects that will impact every aspect of your financial life. The people who will be hurt most by a housing crash are people who have only just purchased their first home and still have a large mortgage on it, since they have the smallest equity buffer before their mortgage is worth more than their house. People who have owned their home for a long time and have a small or no mortgage won't be hurt and might even just enjoy the lower property taxes. Sacrificing the people on the bottom rung of the housing ladder to let more people grab on isn't a good idea, and it weirdly doesn't even make houses affordable. This was the situation for many American households in 2008. Even though house prices in some areas more than halved, the actual rate of home ownership over that time also fell significantly. So just making houses cheaper isn't enough to make houses more affordable, unless you look at some radical and not so radical solutions that won't be politically popular, but just might work. So it's time to learn how money works to find out if you can make houses affordable without destroying the economy in the process. This week's lesson is sponsored by Brilliant. Brilliant is an educational platform designed for comprehending what you learn. It focuses on a bottom-up learning strategy, starting with the fundamentals using interactive problem-solving activities. Learning and retaining knowledge like this is shown to be 6 times more effective than traditional video lectures. The courses available on Brilliant are carefully crafted by world-class educators, scholars, and professionals from leading organizations and institutions such as MIT, Caltech, Duke, Microsoft, Google, and more. Want to know how ChatGPT works? Brilliant offers a wide range of excellent courses on artificial intelligence, including a course called How LLMs Work. The course is an immersive AI workshop that lets you experience and harness the mechanics of today's most advanced tools, getting hands-on experience with real language models as you explore how they work. With Brilliant, learning is accessible from anywhere using a computer, smartphone, or tablet. Brilliant provides opportunities to acquire real knowledge in just a few minutes each day with its captivating and enjoyable lessons, seamlessly integrating into your schedule whenever you have time. To try everything Brilliant has to offer for free for a full 30 days, visit brilliant.org/howmoneyworks or click the link in the description. You'll also get 20% off an annual premium subscription. There are solutions that could actually make houses cheaper and keep them cheaper, and the political will to take these drastic steps is growing every day. You see, this chart here doesn't tell the full story. The spike here wasn't a bunch of new people buying a home and then selling it again. It was mostly young people moving back in with their parents at the start of the pandemic. This chart only measures the percentage of Americans that live in an owner-occupied home. It doesn't account for if they actually own it. According to data collected from the U.S. Census Bureau and compiled by USA Facts, the number of people aged between 25 and 34 still living at home with their parents peaked to an all-time high in 2020 and has remained near historic highs. Most young adults in this age group would prefer a place of their own. But house prices and rent have made it financially challenging for most and outright impossible for many. So we might soon have enough people to start demanding more drastic steps. One solution that has gained a lot of attention in recent years is a land value tax that, as the name suggests, would charge property owners on the value of their land, but not on the value of the property as a whole. A land value tax doesn't consider the value of buildings and improvements on top of the land. It just accounts for the value of the land itself and charges whoever owns that land a percentage of its value every year, just like you pay a percentage of your income every year. There are details to be hammered out over exactly how much that percentage should be and if it should be progressive like income taxes. For example, someone that owns their family home on a lot worth $500,000 might have to pay 1% or $5,000 every year in a land value tax. But a wealthy landlord that owns 50 single-family homes that are collectively worth $25 million might have to pay a 4% rate or $1 million every year. With the right fine-tuning, this system, which was first popularized by economist Henry George, promises to fix a lot of society's problems, including housing. In his most famous book, Progress and Poverty, George argued that a land value tax could be a country's only tax if it was managed well enough. The name of the book sounds about as depressing as your average How Money Works video. But it became so popular in the late 19th century that an entire political movement grew up around it, today known simply as Georgism. Supporters of Georgism make some big promises, but for now you only need to focus on one aspect, which is that it should make housing more affordable. Adding a tax to something to make it more affordable might be a little bit counterintuitive. But if landowners have to pay a portion of their land's value every year in tax, they have a strong incentive to maximize returns on that land or otherwise sell it to someone who could. The land value tax on a completely empty lot should theoretically be the same as the land value tax on a lot next door that has a 50-unit apartment building on it collecting 50 sets of rent. The owner of the vacant lot is motivated to either sell their land or build something on it to generate income to offset the tax that they are paying to own the land because they pay the same tax no matter what. This could act as a way to discourage vast landholding purely for capital appreciation, because it makes it a lot less profitable to sit and hold on to empty real estate. A broad land value tax could also offset income taxes, which means regular working people will have more disposable income to put towards buying houses. Traditional Georgism actually argued that a land value tax could replace income taxes entirely, but even if you don't believe that is possible, it would still help. If the average house is worth $1 million, that is not actually a problem if the average worker is making $250,000. But in reality, house prices have massively outpaced increases in wages since the 1970s. A land value tax could rebalance this in three ways. The first way is by reducing income taxes, since the government would get an alternative source of revenue. It's up to you to decide if they would really pass that along, though. The second way is by making real estate a less attractive buy and hold investment, pushing more supply onto the market by getting people to actually do something with their land instead of treating it like a buy and hold investment. The third way it could close this widening gap is to encourage people to invest into actual businesses that make stuff and employ people rather than buying and holding land. More business investment instead of more real estate speculation should increase worker productivity and by extension wages, closing the gap between income and house prices. Perhaps the best part of all of this is that it can be done slowly, so that house prices don't collapse overnight, which would just make things worse for regular people. The challenge with this is political. People don't like taxes. And without sitting everyone down and forcing them to read the work of Henry George, you are going to struggle to sell this to voters when big landowners can easily lobby against it by talking about poor hardworking farmers and retirees that are going to be forced out of their home by another tax. The moral justification of a land value tax is that a country belongs to its people. And if you specifically want the exclusive use of a bit of that country as your own private property, you owe a little bit of rent to everybody else in the country for using land that belongs to them. It makes sense, but it's not going to be politically popular. It is also more government interference in the free market, thumbing the scale in favor of one type of investor over another. But that's actually the point. Even if widespread land value tax is never going to happen, at the very least, taxes that currently favor real estate over business investment should entirely be scrapped. Real estate-specific government perks like 1031 exchanges, reduced capital gains, opportunity zones, negative gearing, pass-throughs, deferments, deductions, tax credits, home buyers plans, government-backed mortgages, and home office write-offs are all kind of like a negative land tax which shifts government incentives in favor of hoarding as much land as possible. With this many perks, you shouldn't really be surprised that people buy real estate as an investment. The other weakness of a land value tax is that it assumes that people with land holdings wouldn't already be building housing on them to maximize their rental income if they could. But they can't. So, the second solution to making houses more affordable without destroying the economy is simply to build more houses. Zoning, NIMBYism, HOAs, a long list of confusing codes, and a lack of skilled tradesmen has made building a home a major ordeal. The sign of a successful economy is that it can produce things like a computer, a car, or a house efficiently and for a competitive price. We have convinced ourselves that houses are somehow special, and that them being limited and expensive is a positive characteristic. According to census data, America is building fewer houses today than we were in the 1970s, even though our population has almost doubled. Building houses does more than just increase the supply of an essential commodity. It also gives lots of jobs to lots of people because building homes and the utilities that support them require real hands-on work. Now, just building more houses won't solve all of our problems. American cities have a major problem with urban sprawl. Building a house an hour away from a city center with no public transport or local amenities just replaces one problem with another. But we can fix this by building medium-density housing for people who just want a decent place to live. People are pro new medium-density home construction nationally, but are anti-construction locally. According to a survey conducted by the US Census Bureau, home equity is simply considered as most households' most significant asset, so most people don't want housing supplies diluted, especially in their local area with cheaper alternatives. I don't think I really need to convince you that building more houses to fix a housing shortage is an important step, but it probably won't be enough by itself. China has built more houses than any other country on the planet in the last 20 years, and they have homes that are even more unaffordable than ours. Yes, they have a lot of people, but their building spree more than made up for this. China built so many new homes that thousands of new developments and millions of apartments are sitting empty in so-called ghost cities that exist just for people to own a home. In China, a home is not just people's biggest investment, it's their only investment. According to an analysis by JP Morgan's private banking division, Chinese real estate was the single largest asset class in the world as of 2021. And that's exactly the problem. It was a financial asset first, and a place for people to live second. A lot of the housing constructed in China in the last 20 years you couldn't even live in. It was an empty concrete box with no utilities in a tower with no people. It was a financial asset in the world's biggest filing cabinet. But learning from those mistakes can show us the third way to make housing affordable without destroying the economy. China is experiencing a significant slowdown because of how much emphasis they put on real estate as a financial asset. But here in America, we are making the same mistakes. Companies are turning family homes into financial assets that can be bundled up and traded on securities markets like stocks, bonds, or options. According to data from Redfin, investors purchased more than a quarter of affordable homes sold in America last quarter, which was an all-time high. Investors include anybody from someone purchasing their first investment property all the way up to Invitation Homes buying their 100,000th home. The number of single-family homes owned by large corporate investors is still less than 2% of total housing stock and a small share of home purchases. But before COVID, it was less than 1%. Whatever the investor looks like, real estate has become too attractive as a financial asset because rents are high and the government has demonstrated that they won't let prices fall, precisely because the real estate market has become too big to fail. Definancializing real estate could be as simple as an outright ban on corporate ownership of family homes. If my community polls are an indicator of national sentiment, it's one of the first solutions that would be politically popular. Just reining in lending could also put the brakes on property investors who see real estate as a way to leverage their way into an overnight fortune by extracting rent rather than investing in something productive. To be fair, the financial system is just as guilty. If you want to take out a 5-to-1 leverage position to start a business that will employ people, a bank would laugh you out of a branch. But ask for a 50-to-1 leverage position on a home, and you will have financial firms fighting for your business. Now, I am going to be writing an op-ed about what happens if we let house prices keep going up over on my free email newsletter Compounded Daily. You can sign up to read that using the link below. Now, the bonus force solution to unaffordable housing is to fix our overly complicated tax code, so go and watch that video next to keep on learning how money works.